Hi traders, welcome back to another trade review. So for this particular trade, I would say a lot of your positions are extremely well. This particular trader took about 5 positions last week, and 5 of them are all losses. So let's really dig into the main reason behind these losses. So let's have a look at the pound dollar first. All right, we don't have to follow the sequence. We go for pound dollar first. If you look at the 1 hour chart, or maybe we drop back to the daily time frame, I've already said that I'm bullish on pound dollar since a long time ago. But on Tuesday, when price started to flush down, that was based on government speech, I guess, and then Powell speech come in, it just completely crushed towards the downside. Even when price pushed all the way down, I clearly knew that I would still go for long. That's why I took a long on Aussie dollar. Yes, I did not took any long on pound dollar. If I took a long here, it would have been a lot bigger. It would have been a 15 to 20 R. But if you look at the price action here, does it really seems like a downtrend to you? No, right? So okay, of course, from hindsight, I can always say it doesn't look like a downtrend. But if we go back to our trade calls, even when price constantly falling apart, just continue plummeting down, I've kept saying that I'm stubborn on GU long, and I'll continue going long. Of course, I didn't take any trade on pound dollar along the way because I didn't identify any sort of opportunity. But when price broke through that low, when it broke through it, remember, because right now, if you look at the daily chart, price has turned into an uptrend, right? Into an uptrend. All they have to do is to respect this entire zone to be called a valid uptrend. It doesn't really have to just accept this particular level, that particular minor level, because when you start zooming out to the high time frame, you realize that there's a zone here, there's a massive zone between that previous low and a longer term low, which is that 118.40 and 117.90 level. So these are a massive zone for me, especially from the daily perspective. So as a day trader, as a short-term trader, when I know that the bigger picture is still pointing upwards, I would try to eliminate distractions and noises on the lower time frame, because I know on the lower time frame, price doesn't have to respect here, it doesn't have to respect here. As long as it respects high-low sequence, it is still an uptrend. And my job is, I don't mind taking a few hits here and there, a few small losses here and there, but if I'm able to catch the bigger wave up, this position will be extremely worth it. Right, and go back to our trade calls for the past 1 to 2 months. I've already said I'm bullish on pound dollar since October to November 2022. I basically forecasted the reversal here. So drop down to the 30-minute chart, and if you all remember, I've said that we can go long at 118.12. Of course, I missed out on that one. That was a little bit too difficult. One of our members actually caught a long here, and he was able to capture the entire wave up. And when price was actually stagnating here, or what I call consolidating here, this particular trader, one of our members actually asked me as well. He said that he has closed his position. He asked me should he continue holding it, although he did not hold into it. But I've said I'm still bullish on this as price continues to consolidate around at 119.23. If price were to reject this previous structure, it would have bounced off. But why did it take such a long time to consolidate, to digest every selling pressure there? That's because it's heading for another wave up. Alright, with multiple news coming up, with the strong manipulation here, it gives the bigger players a much better price to go long. Alright, if their initial intention is to buy at 119.27, right now the market is offering them at 119.20. Of course you'll buy a heck out of it. Alright, think in terms of bigger players, think in terms of supply and demand. we always want to buy at a low price. As a bigger price, as a shark, we just want to get in at a better price. All right, so I'll say this particular position, this traders actually missed out the entire long. And I know every time when you missed out a massive move in the market, especially you know that you should have gone long, avoid going counter trend. Again, based on my experience, it's never worth it to go against the trend when you're not emotionally stable. When you know that you missed out a big move, your mindset should be, how can I get into the long? How can I get back with the flow? Not how can I go against it. If you look at the candles here, yes, we do have a little bit of swing high, but when the momentum is that strong, without any sort of confirmation candle, at least a candlestick, without any sort of confirmation, can you actually sell into the strength? The answer is no. You can never do that, and I've said this in the community as well. When I'm looking to trade a major reversal setup, as in my pound dollar, as in my Aussie dollar, you can see that I waited for lots of confirmation for that flag to form. I did not buy there. I waited for price to come back down, forming a lower time frame wedge pattern with a doji candle. I waited for multiple confirmations before I make the decision and say, hey, I'm looking to go long or I'm looking to go short. All right, because I know very high chance if I blindly buy into the sell-off or short into the strength, I'm going to get hurt. That's why don't ever do it, especially because right before he took this particular position, he actually took 2 to 3 losses in a row. So when you have taken multiple hits in a row, you need to calm down a little bit, because very high chance if you continue to short into it, you're going to take another loss. And that's exactly what happened on that particular day. I've also said that don't take any more position, but yeah, still another loss. Is it worth it or not? It's not. Okay, because for some of you, maybe you're trading the evaluation account, or maybe some of you are actually trading a smaller account, your personal account, a few $1,000s, or some of you are trading a challenge. If you don't have the habit to practice good behavior, to practice good discipline on a smaller account, don't even imagine yourself being able to handle a 6-7 figures account. Like myself, I'm approaching 7 figures, or you can call it I'm 7 figures. If I can't trade a $10,000 account, can I manage a much bigger capital? No. Alright, so if you want to become a good trader, what's more important is to practice discipline, practice self-control. So skip this one. It's not a very worth it loss. And let's talk about euro dollar. Euro dollar was a particular position that I've called a long as well. I've called a long opportunity on euro dollar. If you caught the move, such a simple, such a clean one, 150 pips into your pocket by just buying into the previous key support level. If you drop back to the daily chart, I've said so many times on euro dollar, I'm bullish on this in the long term. When you're bullish on something, don't care about the sell-off here. I know that was caused by the government speech, but it doesn't affect the thesis unless when the speech opens, it closes all the way under this support. Then it affects our initial thesis. But as long as it's well above this support area, let it do whatever it wants. Let the retail trader go chase the momentum, go have fear, go have panic, go do whatever they want. All you focus on is key levels. Alright? That's why I always say, if you want to become a good trader, you need to make your trading approach as simple, as clean, as duplicable as possible. If you're having a trading system that relies on lots of thinking process, lots of headaches to say, oh, that's the order block, that's the fair value gap, that's the inducement, that's the the POI, this, that, plus, plus, plus. When you start adding up all these complications, that's when things get really, really difficult to repeat. All right. So I'm not here judging SMC. I'm not here judging ICT or whatever, but there's a reason why after I've studied everything, I still come back to pure price action. That's purely because market is not that complicated. It is traders, it is us that makes things really so difficult, right? If you think about bigger players, do they really care about order block? Do they really care about fair value gap, inducement? Do you think they really buy things based on the gap? No, they buy things based on prices and levels. They buy in a bulk. For example, they say, oh, I want to buy at 105.59. Try your best to get me filled. If not, I'll find another broker. Get to another broker. I have got 1 million shares to buy on Eurodollar. Price is at 105.50. Can you get it filled? If you can't get it filled, give me my money back. I'll find another liquidity provider. That's how the bigger players work. That's how the algo works. The AI works, because they are created. They are built to stick to prices, levels. They don't say, oh, there's a potential inducement there, do this, do that. There's an order block there, do this, do that. Just try to make things a lot more logical. And I've spoken with bigger traders as well. They really don't care about SMC or whatnot. SMC, the concept is all revolving around liquidity grab, is revolving around liquidity pool, some highs and lows, some of those stuff. Highs and lows, I do agree. But in terms of order block, those things I think is just a little bit too messy. Order block is basically just turning point, just key levels, but they somehow make things sound a little bit so complicated. Inducement is basically just retracement. Fair value gap is basically just, I can't even explain it. So if I look at the chart here, if you were to trade into every fair value gap, you would have taken a trade here. So what, for some of you who don't know what is a fair value gap, let me just quickly explain it to you. It's basically just a gap created by a strong displacement candle. Again, I really did study about ICT long time ago, and eventually I traded it for 2 months, 3 months. I still went back to price action because my consistency immediately fell significantly. But of course, I did know some people who really trade successfully using SMC. I just feel like it's not a very simple approach to trading, right? You need something simple, straightforward, duplicable. So here we have a fair value gap. Basically means we have a strong candle break through the previous high. That's what we call a displacement from SMC terms. Break through the highs, creating a gap here. Can you see how from the low of the candle and from the high of the previous candle we form a gap? The gap here. So from the SMC perspective, price tends to come back into the gap before the next wave up. And in this scenario, you see it works perfectly well, right? We really did come accurately into that gap. We immediately run all the way up. But does it work all the time? No. None of the system works all of the time. So when you see price starts collapsing like this, I really think the only level you can go long is that key support level. If you basically just sell a buy limit order here, you could have at least captured a 1 to 7.5 position by not overthinking, by simplifying a trading system, by making things straightforward. It would have been a winner. Right? Can you see how straightforward is that? You take a buy limit at the previous low, run all the way up, and that gives you about 7.6. Simple. Okay, so I wouldn't even go deep into this particular position because I know a lot of traders here are trading pure price action. Not many here are trading the SMCs. That's why I try not to go too deep into SMCs to avoid some of the traders here being confused. All right, so took 3 losses on dollar yen. Again, if you go back to my trade calls back in Thursday and also Friday, I've said that I think since Wednesday I've talked about this one. I say if dollar yen is able to close under this 136.90, I'm looking to go short once it breaks through the low, come back for a retest continuation. And again, things were really simple when you start taking a step back. If you start looking at the 1 hour chart, you can clearly see we have a key swing high point here, here, right? And that was a previous retest zone as well, and then we got a breakout here. So if you technically just look at it from a structural perspective, from a resistance perspective, you wouldn't have gotten short into that. You took a short there because you are in a FOMO mode. You are in fear of missing out the sell. But you forget the fact that we had a news at that time, right? We got some yen news there. You took a sell limit there. That's just so risky. It's so risky to set a sell limit at a news, anticipate a full-blown reversal back down. Extremely risky. So if we're taking you short at the level that we discussed in our trade calls, you would have at least again secured another 8 to 9 up position. Clean double top there, run all the way down. So how did this particular trader lost about 3 positions here? It was because he was trading on the 1 minute chart. I've seen all of his entries. He took a loss here and he got tapped out within 1 minute. So imagine you are risking couple $1,000 within a minute. You lost a few $1,000 if it was your live account. Assuming if you're like me, I got 600,000 on my forex fund that is left untouched for now. If you imagine if yourself, or maybe my personal capital, if you're risking $6,000 to $10,000, would you be happy taking a loss within a minute, losing $6,000 to $10,000? You wouldn't be happy, right? So always think in terms of your risk control, risk control, risk control. All right. If you don't practice good habits, good behavior when you're trading a small account, then it's very hard to picture yourself trading a much larger capital, because you don't have the discipline, you don't have the mindset that is required to trade successfully and build up that capital and scale up your capital. So you took a loss here, took a second loss again. Right after you took a loss, you immediately get into another entry, which you also took a loss within 2 minutes. Then after about 20 minutes, you again took another short position, anticipating a reversal again. Tighter stops this time, only 11.5 pips, got tapped out, and guess what? Price technically just run back to the previous high, the high of the news candle, just to collapse all the way down for over 280 pips. So if you take a step back, if you only take one position at a key level, very simple, very straightforward, with a wider stops, having a target downwards, which one do you think is more worth it, is more stress-free? Definitely this one, right? So that's why I say try to make your trading system involving less emotion as possible, because when you start taking a step back, you realize that things are not that complicated. It is traders, it is us that makes things really so complicated. All right, a lot of losses here could have been avoided, and if you really just trade key levels, you would have been secured a 1 to 9, 1 to 10 on dollar yen, and also a 1 to 7 on euro dollar, and that gives you a 15-hour week by just trading support and resistance, trading pure price action. All right, so that's it for the trade recap on that one. Again, every of you who's watching this trade recap, don't start thinking, oh, this trader is not good, this that. As Nibal say in the community, negative self-talk, if you're not even confident about yourself being potentially a successful trader, 6-7 figures trader, then it's hard for you to become one. You need to be positive enough to motivate, to push yourself to move into the correct direction. So if you keep thinking that it's so difficult, trading is not easy, life is not treating me well, it's tough to trade the market, it's hard to become a forex trader, all these negative self-talks will eventually drag your entire self-esteem and confidence to the bottom. So that's something that I want all of you to avoid. Be confident. Even when I was at my poorest period, when I had only 15, I can't pull up, someday I'll pull up a screenshot for all of you. I literally had a screenshot of myself having left 50 ringgit in my bank account. So do you know how much is 50 ringgit? If you convert to USD, that's about $12. I had only $12 left in my bank account. What could have gone worse? Even when I was at my poorest period, when I knew everything clearly fell apart, I was at the bottom of my life, but I still picturing myself being a successful trader, driving an expensive car, wearing an expensive watch, flying business class around the world. Why was I able to do that? That's because I know if I don't have self-confidence, if me myself don't even have faith in myself, nothing good would have happened. All right. So all of you watching this video, remember, trading is not so complicated, but it's not easy. That's why we have extremely high failure rate. That's based on psychological barrier. Lots of people get into the market, they want to get rich quick, they tighten their stops without doing their testing, they're always aiming for the jackpot position. All these small little bad habits or bad or negative mindset eventually will snowball into how we define a losing trader. So if you want to be a successful trader, we don't say successful trader, if you want to be able to consistently beat the market and make consistent income from it, then you really need to start taking trading as a business. Sometimes you lose a bit of trade. As long as you stick to your rules, you stick to your principles, those trades, those losing positions, those money are just investment, are just expenses to get prepared for the next big winner. Every time when I lose 2 to 3 trades in a row, I'm getting excited because I know the winner is around the corner. And that's exactly the kind of mindset I want all of you to have. When you have a bad position, don't have the habit to hold on to it like your spouse. Don't marry to a loser. Let them go. Just like your girlfriend, just kick them away. Just kidding, alright? Just kick them away like a disposable bin, alright? But when you have a winner, although like if we look at this euro dollar, maybe if you really took a buy limit here, the initial phase looks a little bit sketchy, looks a little bit choppy. But as long as your criteria says that as long as price hold above this 105.38, I will continue hold on to this winner because things are now going according to your thesis. Get what I'm trying to say here? When things are going into your favor, I don't care how slow it is. Slow or fast are just like the mood swing of the market. Sometimes it gets a little bit slow in the beginning, but in the end it picks up the speed, just like this one. In the beginning phase it's very slow, even up till here it's very slow, but it's still going up. That's what's more important. As long as the direction favors you, hold on to the winner, and guess what? The momentum picks up. All right. Some traders, when they start seeing a bit of slowing down in momentum, they cut off their position at break even, just to see that price eventually spike all the way into their target. So don't leave regrets in trading, because regrets will turn into revenge trading behavior. You feel like I missed out a position, now I want to go against it. It's impossible for the price to go that high. Let me take a little bit of short position. I dare you, have you ever have this kind of mindset where you feel like, it's a little bit too overstretched, I want to go short? And the moment you start thinking that way, you are actually sticking yourself to the 95% of losing trader, because everyone literally thinks the same way. Successful traders are those who look at the momentum itself, who's not getting involved still can rationally, still can objectively say, or assess that, oh, market is moving up really fast. Should I go long or should I go short? I should be going long because the momentum is pointing upwards. Let me find a retracement. Let me find a good level to go long. That's how good traders think. They don't think complicated things. They think really simple. They have a very straightforward, a very easily repeatable entry criteria, management plan, skill in skill out plans that helps them to remain consistent in the long term. Right? So I hope this particular trade and every of you learn something new from this trades review. Is getting a bit too long, 25 minutes on the clock, and I'll talk to you in the next video. Bye bye. Just let me know if you have any questions.